You're looking at a live shot there at the Philippine Stock Exchange, where fuel retailer Topline Business Development Corp lists on the main board, the first initial public offering of 2025 in what's been a tumultuous first quarter for the world's markets. Topline also lists at a time crude oil prices have fallen below $60 a barrel. That's the lowest since 2021 on tariff-led recession fears. On stage now, as you're seeing on screen, Topline's leadership, as well as the PSCs led by President and CEO Ramon Monzon.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
And there you have it, the start of the trading day
to Topline
and the launch
Business Development
of the very
Corporation
first IPO for 2025, Topline.
Debut.
Joining him for the ceremonial ringing bell there is Topline Chairman and President, CEO Eugene Eric Lapasaran Lim. He is flanked by his team. Most of them, if not all, are based in Cebu. And in the headlines, Topline lists at the Philippine Stock Exchange the first initial public offering of the year in what's been a turbulent first quarter for equities. American credit rating agency Fitch Ratings flags the possibility of a U.S. recession due to Trump's new tariff policy. What will it mean for the Philippines? We speak with Alex Muscatelli, the director of the economics group at Fitch Ratings in London. And how to thrive in this new global order. Philippine Retailers Association President Roberto Bobby Claudio joins us in studio with some answers. U.S. President Donald Trump threatens to impose an additional tariff on China after Beijing retaliated by placing a 34% across-the-board duty on American imports. Trump made this threat in a Truth Social post on Monday as China faces a total of 54% levy on Chinese exports coming to the U.S. The 34% reciprocal tariff got its on top of the 20% duty imposed last March. Moments ago, China's Commerce Ministry responded by saying, quote, it resolutely opposes Trump's threat, vowing to take countermeasures to protect its interests. The ultimatum comes as countries race to begin trade talks with the U.S., hoping to lower tariffs. On Monday, Israeli Prime Minister Benjamin Netanyahu becomes the first head of state to meet Trump face-to-face to discuss tariff relief. Also in conversation with the president is Japan, which is facing a 24% reciprocal tariff.
We have many countries that are coming to negotiate deals with us, and they're going to be fair deals, and in certain cases they're going to be paying substantial tariffs. There'll be fair deals. As you know, I spoke this morning with the Prime Minister of Japan, and we had a very good conversation. They're coming.
Mexican President Claudia Sheinbaum said Monday she would like to avoid imposing retaliatory tariffs, though it could not be ruled out. Meanwhile, European Commission President Ursula von der Leyen prefers negotiations, adding that Brussels is ready for countermeasures. The EU faces a 20% reciprocal tariff taking effect tomorrow, April 9th. The Federal Reserve held a closed-door meeting last night, Manila time. The agenda to review and determine the advance and discount rates to be charged by the Federal Reserve banks. As the president prods Fed Chair Jerome Powell to cut rates, the latter had to say last week about the tariffs.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain.
U.S. markets swing wildly on Monday in the U.S. as false headlines about tariffs circulate, closing yesterday's session mostly lower. The markets went into a roller coaster ride after investors turned optimistic by the erroneous report that Trump was considering a 90-day pause on tariffs. The markets briefly surged after opening lower before declining again when the White House denied the report. By the 4 p.m. close, the Dow fell by nearly 1%. S&P 500 slid by 0.2%, and the Nasdaq ended with a gain of 0.1%. The S&P is nearing bear market territory, defined as a 20% decline from a recent peak. The index is now down by 17% since its February 19 high. The Nasdaq already fell into bear market, while the Dow entered into a correction. U.S. futures point to a rise when the markets open later tonight, Manila time. The Dow is up by 1.5%, S&P climbs by 1.25%, and the Nasdaq gains by 1.3%. Asian markets have dropped Monday in figures unseen in decades. Hong Kong's Hang Seng led those losses, shedding by 13%. That's the biggest one-day decline that we've ever seen since October 28, 1997, at the height of the Asian financial crisis. Taiwan's TAIEX slid by 10%. That is the steepest fall in a bubble economy. Japan's Nikkei 225 had tumbled by about 7%, extending last week's 9% drops. You can see right there the futures trading at the Nikkei was temporarily halted after declines triggered a circuit breaker. In other Asian markets, Australia's ASX 200 fell by 4%. That's the worst drop since May 2020. And South Korea's Kospi is down over 5%. China's CSI 300 has slid 7%, the largest one-day drop since October 2024. As for European markets, they were not spared from the global sell-off. The Pan-European Stock 600 down for the fourth straight session by 4.5%. And London's FTSE 100 declined by 4.3%. Germany's DAX fell by 4% as well. And France's CAC 40 slid by 4.7%. Let's take a look at the Asian markets, seeing some green arrows here. Some green shoots of recovery, hopefully, at the get-go in Tuesday's session. ASX 200 up by about 0.1%, Kospi climbing over 2%, and the Nikkei 225 5.3%. While the Philippines has the second lowest U.S. reciprocal tariffs next to Singapore, Alex Muscatelli, the director of the economics team at Fitch Ratings, warns that this could still deliver a shock to exporters. Here's my exclusive interview with him from London.
In our March Global Economic Outlook, we had assumed that the effective tariff rate of the U.S. on all its trading partners on average across the globe would be 18%. And in particular, we assumed that there would be a 35% average tariff rate on China, 15% on the European Union and most other countries, and similar, although slightly lower rates for Canada and Mexico. But with the announcements that we had, if these were to remain in place, we think the effective tariff rate is around 25%, which would be significantly higher than the one we assumed back in March, just a few weeks ago, and would be the highest effective tariff rate for the US for more than 115 years.
Wow. Weren't even born then, assuming that this all happens, Alex. Who brings down the global economy first? Is it the U.S., or do you think its biggest trading partners? Because there are those who say that American consumers will suffer higher cost of goods, and others say that the U.S. will fall into recession.
Well, first of all, the impact of tariffs will be felt by in America. The impact of higher tariffs will result in higher consumer prices and lower corporate profits in the US, because it will raise costs for US importing firms that then use their imports to then process and as intermediate goods. So the first impact will be on domestic US prices and domestic US profits. Then we have what this will do. This will squeeze real incomes in the US. The lower profits and the higher policy uncertainty will act as a drag on business investment. So we were expecting, we had already factored in a bit of a slowdown in US GDP. In March, we thought that the US economy was going to grow by 1.7% this year. So this is a downside risk to that.
So whose sovereign ratings are looking vulnerable here in Asia?
Well, I would say, first of all, I wouldn't want to comment too much on sovereign ratings per se, also because these things are decided on a rating review by rating review basis. And also it's actually I'm in the economics team, so I'm actually not so involved in that side of things. But it's clear that from the macroeconomic perspective, there is the announcements of April the 2nd do assume a bit more downside risk to our forecasts for specific Asian economies, just mechanically through the higher tariff rates that we saw announced for Vietnam, for Thailand, Taiwan, also Philippines, but also India, Korea. I think there are two things to bear in mind in this of sources of risk. One is the increase in the tariff itself. Two is the exposure of a specific country to the US, and this is where relatively larger countries, well, for example, China, for example, Japan, are probably less exposed than Korea, than Malaysia, than Vietnam, just because the share of US demand in GDP, in their GDP, is a bit less, just mechanically.
Well, the Philippines is second to the lowest next to Singapore in terms of the reciprocal tariffs. Does this provide any relative insulation, if you will, as Vietnam's and Cambodia's are at north of 40%?
Possibly, but it's still a big increase. I mean, if you look at where tariffs are now for the Philippines, if I'm not mistaken, we're looking at effective tariff rate of around 6% for the US on Philippine on imports from the Philippines. So if this advertised value, new tariff value, goes through, it will still be a bit of a shock to exporters in the Philippines.
True. So who in Asia then can or may benefit from the trade and investment diversion effects? Because that's the next step then, the money flowing where the tariffs are lowest.
Indeed. Well, the problem is it's not exactly clear who does this time around. So, and this is one difference from the trade war that we saw in Trump's first term. And so in 2018, 2019, those tariff changes, those tariff rises were very focused on China. And so what happened in subsequent years is that we saw a lot of production moved offshore and a lot of supply chains lengthening with investment in Southeast Asia, especially Vietnam. Vietnam has become one of the US's main trading partners in the space of a few years. It's not clear anyone's in a fantastic position to do this time around. So maybe it's not a question of seeing which Asian countries can benefit from diversion from trade from the US, but seeing which markets can everyone access maybe as a replacement to the US.
We'll follow through on that as the weeks go by. That's Alex Muscatelli, the Director of Economics Team at Fitch Ratings in London. And more conversations coming up on Money Talks. Topline becomes the first listing in 2025 and also the first listing from Cebu in 10 years. And also, Roberto Bobby Claudio, the President of Philippine Retailers Association, will talk about the silver linings of the global tariffs. Keep it here on One News. Eric, si Cathy, maayong buntag.
Yeah, may buntag,
Great,
Cathy.
salamat for making the time. We saw you ring the bell, and I know it was a dream from 2024. A very nice anecdote that Monzon had said about you watching in the audience, hindi ba?
Yeah, exactly.
All right, okay.
But, thank you, Cathy.
Sure, thank you. I'll be with you in about 3 minutes. Thank
Sure,
you.
sure. Thank you.
Do you know what the price is? We're not getting any price pa.
Right now, kanina we saw 29.50.
Okay.
Uh,
29.50? That's centavos, right?
Centavos.
Got it.
295.
Coming
Yeah,
from
thank you.
31.
Yeah, from
Got
31.
it, got it. All right, thank you.
Thank you.
Welcome back to Money Talks. I'm Cathy Yang. The Philippine Stock Exchange sank to its lowest level in 2 years. The PSEI declining by 4.3% Monday to close at 5,822, the lowest since October 3, 2022. The 261-point drop was the biggest since March 14, 2022. This Tuesday, the stock market is up by about 0.3%, quite a bit of a change there at 5,839, still well below 6,000. As for the Philippine peso, it opens this Tuesday stronger at 57.35 per dollar. The peso returned to the 57 mark yesterday, depreciating by 60 centavos to close at 57.43 to the dollar. Cebu-based fuel retailer Topline debuted at the Philippine Stock Exchange about 15 minutes ago, and its listing price is at 31 centavos per share. With us now for more is Eugene Eric Lim, Chairman, President, and CEO of Topline, live from the Philippine Stock Exchange. Congratulations, Eric. Maayong buntag.
Maayong buntag. Thank you very much, Cathy.
So how's it going so far?
Yeah, so far so good. We just finished our the bell ringing, and I remembered in our last interview you mentioned see you at the bell ringing. So yeah,
Yes,
here we are.
Here we are in a hybrid setup. I was pretty amazed that you also brought in your Cebu colleagues in a hybrid setup of an IPO launch. But you know, you've listed at a time of great market volatility. No regrets?
Yeah. Well, actually, it's quite interesting right now. We always inform the team that basically we can't control everything. We just want to make sure we can maximize what we can control, and we can also forecast what we can't control. So again, it's always interesting times. So yeah, we'll see later in the trading session.
How's the stock doing right now?
So far, the last time I checked, it's about 29.50. So it's a little bit strong, hopefully. So we're basically hoping that the investors would value the strategies that we're implementing in the company. So basically, what we're doing for the listing is it's the importation, integration, and the expansion story for Topline. So this will be implemented pretty soon. So hopefully the investors and our shareholders would see value in that.
And sift through the noise. It's news du jour. We're all over Trump's tariffs, as you know. How exposed is Topline to tariffs? And are there any mitigating elements to your business model?
Actually, it's quite unique if you really think about it. If you look at different countries, it would really depend on which country you're into. So the Philippines is taxed not really very high. So that's probably one of the bright spots here in the Philippines. So for us in Topline, we think it's not really that much in terms of pricing, especially for the fuel products, since at the end of the day, we've been importing ever since. So the Philippines is a net importing country. So yeah, so fundamentals are still there. So we're still quite excited for this listing.
Well, on that fundamentals, you mentioned the fundamentals. Crude oil has fallen below $60 a barrel. That's the lowest since 2021 because of the tariff-led recession fears. So what do you make of the confluence of these factors? On the one hand, you've got lower crude, meaning cheaper importations, but on the other, a U.S. recession that could mean a global slowdown for all.
Yeah, I think it's more about compartmentalization, Cathy. So if you look at the inflation numbers last month, I think the government gave us a really good numbers, quite low. And then with the current existing oil condition pricing, it's quite soft right now. which gives probably more better for inflation in the future. It's going to be a little bit softer in the future. So if you think about different scenarios as to the tariffs, so it would really depend on which industry you're into. But so far for us, since we have a very good pricing strategy, it's either the price of oil will go up and go down. We're still fine with that.
All right. Well, all the best, Eric, and on your way back to Cebu and promote all those plans. Eric Lim,
Yeah,
of
thank you so
Topline.
much,
Daghang salamat.
Cathy. I'll see you soon. Take care.
Well, the Bangko Sentral ng Pilipinas has set new interest rates for its discount window facility effective today, April 8th. The peso loan rates now range from 7.07 to 7.38%, slightly lower than March. Meanwhile, U.S. dollar loans hold a fixed rate of 6.79% across all terms. Japanese yen loan rates also dropped from March, now ranging from 2.63 to 2.80%. The Bangko Sentral says these rates may change depending on policy shifts and market movements. Also from the Bangko Sentral, the country's gross international reserve stood at $106.2 billion by end of March. That's slightly lower than the $107.4 billion level recorded in February. The Bangko Sentral says the current reserves is enough to recover 7 months of imports and payments and nearly 4 months of the country's short-term foreign debt. The decline mainly came from the government's debt payments and the Bangko Sentral's foreign exchange operations. Security Bank expects inflation to stay moderate this year amid global trade tensions. Inflation averaged 2.2% in the first quarter, the lowest in 5 years due to lower food and transport costs. Security Bank now sees a more moderate inflation by the end of the year. It has cut its forecast to 2.7% from 3.2%, citing lower food and oil prices and a stronger peso. March inflation eased further at 1.8% as rice prices and the ongoing imports fell. Global rice prices hit a 3-year low, while oil prices remained subdued amid rising trade tensions. Security Bank also noted the impact of new U.S. tariffs under Trump, which may slow global growth. With inflation easing, they expect the Bangko Sentral to cut rates by 25 basis points on April 10th. Meantime, fewer Filipinos were unemployed in February compared to the previous month, according to the Philippine Statistics Authority. The unemployment rate fell to 3.8% from 4.3% in January. This means about 1.94 million Filipinos were jobless. While that's higher than the 1.8 million recorded last year, it is lower than January's 2.16 million. Underemployment in February also fell to 10.1% from 12.4% in January, translating to 4.96 million individuals. The country's employment rate for February stood at 96.2%, with the services industry still the top employing sector. Coming up after the break, we'll check out the official trailer of the latest Mission Impossible film. Stay tuned to Money Talks on One News. to Money Talks. I'm Cathy Yang. Our next guest says now is a very good time for Philippine factories to take advantage of the global tariffs and supply chain shifts. And he shares that view punctuated with an exclamation point. Well, with us now for more is Roberto Bobby Claudio, the president of the Philippine Retailers Association and chairman of Quorum Group of Companies. So good to see you here, Bobby. We need some silver linings. Where are we seeing them?
Thank you, Cathy, for having me this morning. Yes, we should. I think the whole world is still at a loss what effects this global tariffs that President Trump made. But there will be shift in movements of products. So I think the Philippines should be in a good position to take advantage of this mess or the confusion going on, and simply try to do the best that we can, especially among the businessmen. This is an opportunity for them now to look at where these products are moving and which tariffs are being affected.
So what is a good scenario then, Bobby, if we were to make the most out of the situation we're at and from the ecosystem of retailers in the Philippines?
Well, the best situation would be our businessmen, especially our entrepreneurs, to take advantage of the movement out of China of some products where they want a secondary or another Asian country to produce for them. So we must boost our downstream industries, steel, leather, textile, so that we can catch some of those Chinese manufacturers.
You mean fix the supply chain?
Fix the supply chain and even the source of the raw materials.
But that's going to take time.
It can be fast because we can just simply, some Chinese companies are starting to look at the Philippines and other Asian countries and say we want to move our facilities there so they can take care of the supply side. Our capability should be the businessman who can take on the business. Now, for retailers, there's another positive effect on this because some goods from China destined for U.S. may be cut off or not pushed through supplying the States. So Asia will be flooded with Chinese products that used to go to the United States. And hopefully it will change the demand and supply side. And Asia, Philippines in particular, can take advantage of all of these products coming in.
And be a sort of a transshipment point. Like
Yes.
for instance, goods from China going through the Philippines before it goes to the
Yes.
US.
In fact, that's why Vietnam and Cambodia have the highest tariff that Trump imposed because they were taking advantage of this feature. So,
Well, I'm thinking about the port congestion
well,
in
that's
this
right.
case then. I mean, there's going to be a lot
of
volumes coming through unexpectedly. So how
and
do we
maybe
resolve
stored
that?
for quite some time. Well, I guess our biggest port operators are starting to work on it already and preparing for it with the big ones. Yeah, there are two big ones, the ITSI and the others. So it's basically opening the eyes now of the Filipino businessmen. Take advantage of these products that are moving out of China because they need some either a transshipment point or a secondary processing. A lot of these were Chinese-made products, but then they were brought to Vietnam or Cambodia, did a secondary processing or simply repackaging and says it's made in Vietnam. So it skips the U.S. tariff imposition on China. So we should be able to we should take advantage of this. And we want the government's cooperation on downstream industries.
True. And that means a multi-sectoral approach to a problem that poses as an opportunity. Thank you so much.
Thank you.
For the ideas there and finding those silver linings on a daily basis. And that was Bobby Claudio, the president of the Philippine Retailers Association. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.